Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that ES continued to balance within a range. And if we look at the last 3 days, we can see that the market is very balanced and consolidated as well. So at this point, really the key areas on the upside are the 89 to 91, which marks the upper edge of the recent range, and the 60 half to 63, which marks the lower edge of the recent range. And continued balancing typically leads to directional movement, and that can mean an upside breakout, or if we start heading lower, it can mean a downside break. But until we break out above 89 to 91 or break down below 60 half to 63, the market is stuck in a range and it is in a very balanced and two-sided state. So heading into the open, we are going to give buyers the edge above 76 quarter to 77 quarter and above 71 to 73. But overall, we have to realize that the market is currently in a very balanced and two-sided state, and really it can't tip either way. And until it tips one way or the other, it's stuck in a range and it's range bound. So on the upside, 89 to 91 is still an area where responsive sellers can be active on a retest, and it is a larger time frame inflection point. So in the event that we break out above 89 to 91, we can get upside acceleration. So as long as we are breaking out on strong momentum, on some decent volume, and we're getting some participation from the broader market, and Nasdaq and TF are looking healthy as well, then there can be some decent follow through in the event that we get a upside breakout, because the 89 to 91 does mark a larger time frame balance area as well. And now even on the smaller time frames over the last few days, we have been balancing in this range. So typically when you break out from that type of balance, where it's a 3 or 4 day balance, but within the context of a larger time frame balance, you typically get some follow through. But at the same time, that is a pretty decent resistance zone. So we are going to have to see some pretty nice and sustained upside momentum in order to get a directional break to the upside. On the downside, a break below 76 quarter, 77 quarter would be a red flag and a early warning sign. And then if we break 71 to 73, the short-term control could shift from the buy side to the sell side, bringing the lower edge of the balance into play at 60 half to 63. On the downside, that's really the key inflection point. And similar to the upside scenario, if you break 60 half to 63, it can lead to long liquidation, because then anyone who bought within the last 3 days would be put in a losing position. And on the downside, we also have to see some decent downside momentum in order to get that going, because like I said, until we actually get a directional break, the market is stuck in a range. So first time down into 60 half to 63, responsive buyers can be active. But if we are going down on very strong momentum and the other markets are participating and are also selling off, then a break below 60 half to 63 could lead to liquidation. And from there, the market can go down to 49 to 51 half. The open gap at 43 would come into play, and the 37 to 39 zone would be in play as well. But like I said, until we actually break, we are stuck in a range. And right now, the market is balancing, within the context of a larger balance and at the upper edge of that balance. So for that reason, for now, we are giving a little bit more edge to the buy side, but with the understanding that 89 to 91 is really the area that needs to be taken out in order for the buyers to retain that control and in order to get some directional movement to the upside. Until then, we are stuck in a range, so we have to treat it like a very balanced and two-sided market and be open to taking longs and shorts within the balance. You can see over the last several days, both sides have worked actually pretty well. Sellers have been active at the top of the range and buyers have been active at the bottom of the range. And, the middle has been a little bit more of a chop area, a two-sided balanced area. But overall, we've seen edge on longs and shorts, so we're open to taking trades in either direction. And, we're not locked into a single view because right now the markets are very range bound. And once we get a catalyst, once we actually get a directional break, then we'll know which side is really in control. And until then, we're simply balancing within a range from 60 to 90 roughly. So those are the main ideas heading into the open. We are going to be watching to see which side is more dominant off the open. Overnight, it's very two-sided, and like I said, it can still tip in either direction. On the smaller time frames, a breakout above the 82.75 level would confirm the buyers in short-term control, and that would bring the gap fill, the prior VPOC 87.25, and the 89 to 91 zone into play, and then that's really the critical area where buyers have to press, and that's the make it or break it level for the S&P here. And if we do get a breakout, then on the upside, we could get some decent range extension up to 98 to 2000 and even 1175 to 1475, and the open gap at 16.25 would be in play as well. So those are the main thoughts. Let's see, which side takes over off the open. Be nimble, be open to trading in either direction, not locked into any single view or any single directional view. And that's really going to serve us well today. So those are our main thoughts. Let's see which side presses and dominates, and we'll take it from there.